I went deep on the numbers today, and the numbers did not make any sense. There was a way to be able to make it work, but the numbers that they did, and they had this ridiculous, the chart that they had with the mathematical equation. I mean, are you kidding me?
A stock market crash, just like the 1987 Black Monday collapse, has a strong possibility of happening again this Monday, April 7th, if President Donald Trump doesn't course correct immediately.
And you'll say, please, please, it's too much winning. We can't take it anymore.
This is what happened on Black Monday, 1987, actually the worst single-day crash in American history.
The crash, which took place on the 19th of October, 1987, also called Black Monday, currently holds the record in terms of daily percentage losses. The Dow Jones Industrial Average fell by 22.61% in just one day. Definitely the largest one-day percentage drop by far in the United States.
And this is all due to the blanket tariffs that were just imposed by the U.S. on all nations, reciprocal and otherwise.
We're going to have to go through a little tough love, maybe. They all understand.
Because surprisingly, even areas that don't have any imports or exports with anybody or even people, only penguins are getting tariffed.
Even penguins aren't safe from Donald Trump's tariffs, because the Heard and McDonald Islands were listed by the White House yesterday among countries facing new trade tariffs of 10%. But these islands near Antarctica are completely uninhabited, except for penguins.
Now Canada is retaliating, China is retaliating. If Europe retaliates before Monday, if Trump makes no statements settling the market, financial analyst Jim Cramer says that this coming Monday could be the worst crash America has ever seen. Listen to this.
The implosion of our markets continues. And it's so obvious that this is a man-made obliteration. It's probably not over. Today's action, Dow plunged 2,231 points. S&P plummeted 2.97%. NASDAQ only nosedived 5.82%. Remind you that we're in one of three modalities, okay? We could be in for the grips of a quick bear market, a la the COVID 220 model. We could be in for a 2000-style bear market where tech was laid to waste for a very long time. Or it might be the big kahuna. That's the one of October of 1987, where the market went down hard for 3 days, Monday, Wednesday, Thursday, Friday, and then it went even harder on a day we call Black Monday, where the market fell 22%. The president doesn't try to reach out and reward these countries and companies that play by the rules in the 1987 scenario, the one where we went down 3 days and then down 22% on Monday, has the most cogency. We will not have to wait out too long, will we? We'll know by Monday.
And by the way, just so you know, Jim Cramer was actually a fan of Trump's policies and a fan of Trump doing reciprocal tariffs. Jim Cramer liked the idea that Trump was going to tariff countries in a reciprocal way. But according to Jim, Trump botched it because the tariffs aren't really reciprocal and the execution is not going well. And because of all this, it is becoming more and more likely that the market is due for a big crash.
What the heck is going on?
Well, I'm let down because I'm not a free trader. I'm a fair trader, always have been from the days when you worked with me at CNBC.
Yep.
And what I was hoping was that a coordinated thing where if you are charging us 20%, we charge you 20. Instead of a car where we're only making you pay 2.5 and you're not letting us in, we try to get things better. But
right.
instead,
so on a specific thing, you go, if they're 10 on a car, you go 10 on a car.
But I went deep on the numbers today, and the numbers did not make any sense. And I was actually.
I was doing like bananas in Vietnam. You did Cramerica.
Well, I just said, it's one of these things where if I'm doing 100 billion and you're letting me do 10 billion and I'm letting you do 100 billion, there was a way to be able to make it work. But the numbers that they did, and they had this ridiculous. I mean, that was the chart that they had with the mathematical equation. I mean, are you kidding me? How about just like
it looked like an Einstein.
I know. How about the fact that it was just wrong?
Yeah.
And what bothered me, Aaron, was that they really did over and over again. The president said, "Listen, it's going to be reciprocal. So you do it, we do it, and that was going to be so good." And I really believed in it. And I feel like a sucker tonight. Because I am not a free trader, and I do not believe in free trade. And I was just as tough, if not tougher, than his people. But they screwed it up, and they really, they did it a totally ill-advised way. And I was very let down as someone who really, truly believes that free trade is awful for the American working person. This is what they came up with. Geez, come on, have some gumption, have some math. They assured us over and over again, Aaron, that they were going to do the thing that would make it so that the tariffs would come down and the countries would that were bad actors would change their ways. And then Israel decides to get rid of tariff.
And they tariffed them anyway.
Vietnam decides to cut their tariff, and they still got the highest tariff. It was such a shame because they missed the opportunity, and now they have to pay the price. And it's funny, too, because none of this stock market, none of this had to happen. And I feel bad because a lot of people lose money when this happens. I hope people just be calm, be constructive. But the way that they handled it was so Bush League that I was surprised.
Now, here's the thing most people don't realize. Just like gold, Bitcoin's success has actually very little to do with tariffs. The Trump administration is pro-crypto, and it is clear that they're treating Bitcoin and crypto differently. Even Scott Bessent, the Treasury Secretary, makes it clear that they want Bitcoin to thrive because of all this.
It was unclear whether we were going to exempt gold from tariffs, which I believe we have. So there was a big move out of vaults in Switzerland, out of vaults in London to get it into New York. And look, that there are a lot of different stores of value over time. Bitcoin's becoming a store of value. Gold has historically been a store of value. I think what's interesting is where do we see the gold demand coming from? A huge amount is from China.
Yes.
Where they, as I said, they're in the middle of an economic recession/depression. People don't trust the Chinese currency because they have capital controls. There are 1.4 billion Chinese who all want to get their money out, and they won't let them. They will let them buy gold.
Make sure you subscribe to Altcoin Daily for daily crypto videos, keeping you informed on everything going on in the market on a daily basis. I wanted to do this video for you today because I want to make sure you're aware that this is a real possibility. Now, it's also a real possibility that the bottom is already in, but either way, we won't know that until the future in retrospect. Either way, I think we're in the bottoming zone. And if you have cash on the sidelines, I think now's a great time to cost average. So yes, expect volatility in the market over the next few days, but after that, after we get through this, some analysts think that Trump is actually playing 4D chess and actually trying to do more than what he's letting on. Yes, he's not admitting that costs of goods will increase with these tariffs, but what Trump is doing with these tariffs and economic policy in general could send Bitcoin much higher, maybe even $1 million, at least according to 25-year in the game macroeconomist Luke Gromen. That's what he thinks. I haven't heard anybody else discussing this theory. If this is even partially true, this could actually be very good for Bitcoin. Listen to this. Tell me if you agree or not.
The Trump administration, to me, it's very clear what they're doing. Stop recycling your dollars into our capital markets. Listen to what Bessent said. Wall Street is not hearing him, and I think he's doing that on purpose. We want Main Street to do really well. Wall Street has done really well. They'll still be okay, but we want Main Street to do really well. How do you do that? You let our deficits crush the dollar via gold by making it hard, if not impossible, but certainly have higher cost of carry for your trade creditors to recycle into the NASDAQ. And so it's, for example, super interesting to me. I've written about it. I've been writing about it for 3-4 months, as you know. The biggest Belt and Road hub in the world is the NASDAQ 100. I mean, this is like the stupidest trade in the history of the world from a trade and economic perspective. So the 1% of America does great. The government, federal government does great. And the rest of America gets crushed and the country gets crushed, which is we run these deficits. We offshore these jobs. China, they run surpluses against us. We send them dollars. They buy treasuries. Okay, well, at least we can sort of get some of our money back when we, inflate away treasuries. Well, they stopped buying treasuries 10, 15 years ago. What are they buying since? They own trillions and trillions of NASDAQ. So we are literally selling control of our most valuable companies, IP, et cetera, equity and equity stakes. That's what this is, to the Chinese in return for Chinese-made goods so that the top 1% in Washington can get richer and richer. Like, that's a stupid, stupid trade. And the military is what has finally put a stop to this, which is like, guys, we just lost in Russia because we can't make anything without the Chinese because of this deal. So that's where I think a lot of the sort of discussion that I see still publicly was, well, someone has to run the deficits. No, they don't. Gold is going to run the deficits. And so when you see what we're seeing in gold, I don't think people saying, oh, gold's due for a pull. Who knows? I don't know if it's due for a pullback or not. I don't think they understand what they're watching. Gold's going through a phase change. Gold is going to run the deficits. And I think before long, Bitcoin's going to start to run the deficits. And as that happens, you're going to see gold up big, Bitcoin up big, dollar down against the yuan in particular, big. The Chinese are going to have to consume more of their own production, which, oh, by the way, their dollar and yuan purchasing power of gold and Bitcoin will be going up. They can do that in that case. And we will have a rebalancing mechanism. And, we can't compete. We can't compete because of the dollar, and on global markets. This will now. That's the thing I think Bessent doesn't want to say, which is like, this is wildly inflationary, wildly.